quickly run you through what's aiding Reliance Industries. One, it was a beat compared to street expectation. The company delivered a consolidated EBITDA growth of 12% ahead of a consensus or CNBC-TV18 poll of an 8% increase. The reasons for the beat were two key sectors. One, the oil to chemicals business led by higher refining margins. The EBITDA growth was at 16%, and the second one was retail, much ahead of street expectations. Retail, in fact, was the key positive surprise because we knew that oil to chemicals is going to have a good quarter, given the way the Singapore GRMs had declined. Therefore, the expectation was refining will recover. So O2C was expected to be a good quarter. But considering the pain that retail went through, no one anticipated this kind of a growth. So yes, oil to chemicals did well. And retail did well, but the positive surprise has actually come in on retail. And look at the numbers. On a quarter-on-quarter basis, revenue growth is at 18% and the EBITDA jump is at 16%. So what's driving the momentum in the stock? One is reversal of underperformance and the momentum in retail. So here, quoting what Jefferies had to say, Reliance stock price has corrected 20% since its July peak on slower earnings growth and concerns about retail growth over the medium term. But now the recovery that we've seen in Reliance Retail's numbers, and on a year-on-year basis, the numbers are actually a high single digit. That is giving the confidence to Jefferies that maybe the retail growth can inch up to 15% in FY26, aided by the low base. And this strengthens the case. So they're penciling in that the consolidation phase of retail is over, and from here on, things should accelerate, and the 15% growth is what they're penciling in. But we'll have to wait by to see if the momentum sustains. The second reason is, as we said, the valuations are now at almost COVID levels. Since the COVID correction, this is the cheapest that we've seen in terms of valuation, given the recent underperformance. Also, there are quite a few potential catalysts that lie ahead. One, of course, is the recovery in retail, so that's a positive. The street is watching that. Secondly, the flow-through of recent tariff hikes in Jio. Jio Air Fiber also led a positive momentum in broadband subscribers, the start of new energy projects, and the IPO of Reliance Jio. So these are some positive catalysts that the street is watching, which could drive upside from here on. The brokerage view is largely positive. BofA says the risk-reward is favorable. CLSA has an outperform with a target price of 1650.
Absolutely right, Rima. And Reliance, while it's gone ahead and given a beat as far as what the expectations were concerned, on the other hand, one particular stock